We're going to be talking now about the other kind of mainstay of an investment portfolio, and one that, again, has sort of become increasingly popular over the last sort of 10 to 15 years, and that is property. And for people, particularly I think living in Dubai, is they often want to know, do I buy here? When do I move into the property market? What kind of instruments am I able to buy to enter into the property market without owning the physical asset? Do I buy here or do I buy somewhere else? What kind of position do I need to be in to really make the most of the property market? And I'm delighted today to be joined by Simon Townsend of Ellington Capital, who's an international real estate investor, Anna Skigin, who's CEO and founder of Frank Porter, and Lynnette Abad Sacchetto, Director of Research and Data at Property Finder. Thank you very much for joining us today.
Thank you.
And I'll begin by sort of with a very, very general question just to kind of set the scene. But when, Simon, does property come into a sound investment strategy? Is it at the very beginning? Should you have other assets in place? Should you have other debts cleared? What are the kind of the considerations that people need to have before going, right, now is the time to think about this asset class?
Thank you. And I think I listened to some of the presentations earlier, and one of the most important takeaways I had is that everybody is different. Everybody has a different set of objectives, a different set of investment criteria. So I think the most important thing is everybody needs somewhere to live. Everybody works somewhere, or we hope. Everybody works somewhere. Everybody shops somewhere. So real estate is always going to be one of the most important commodities that exists in our environment. I think as and when somebody should invest, and I'm not trying to duck that, but it really should be a personal choice. What is your rental status? How long are you committing to a market or a region? Is it something for another generation? Is now the time to buy for your children or your children's children in terms of a real estate asset? So for me, I look at real estate as the main asset class rather than as an asset class. And I look at it, what is going to give me revenue and capital gain for the future? And so for me, I think when somebody should invest in real estate, it should be one of the first transactions they do. It's solid. We can see it. We know it's there. We can touch it. We can feel it. We've all got a view on real estate, but it's something that really, I believe, should underpin a portfolio.
Anna, I'm going to come to you. One of the things about property that I think differs from a lot of other asset classes, and this is something that you're actually doing professionally, is its passive income. Have you seen that change in the last 5 years, where people are seeing property not as a bricks and mortar investment, not as somewhere to live, but actually something that can pay them an income over and above whatever else is they do in their working life?
Yeah, for sure. We feel that property is the ultimate income generator, and you can do it via long-term or short-term. And the idea is always to be flexible. The way we look at it is you buy a property, maybe right now it's the best time to short-term the property, maybe in 6 months you do a long-term lease, then that person moves out, you do short-term again. So it's quite a flexible way of using your assets. So we're seeing, a huge increase. People buy properties in order to make money out of them. They don't just buy and sit on them. They buy them, especially in Dubai, in our business, to do short term. So we're seeing, and that's kind of a global trend. We're seeing it everywhere.
Lynnette, does that sort of tally with what you're seeing in somewhere like Dubai, for instance? Are people buying somewhere to live? Are they buying somewhere to rent out? Are there kind of trends that you're seeing as we emerge out of COVID about what the property market is looking like and who's moving into it?
Yes, actually we're seeing probably every trend possible and trends that we weren't expecting during COVID. But when it comes to short term, yes, we're seeing quite a few investors come into the market, either who have been currently living here or foreign investment that's coming in. They're buying the one bedrooms, the studios. They're looking forward to Expo. Short term is definitely a very good viable option. In some cases, you can get some double-digit returns. We're also seeing people who have been here for, let's say, 5 years plus, who've always been kind of like just looking at the property market, trying to figure out, maybe what areas that they would like to live in. These are residents. And during COVID, people had time to think. People saved a lot of money. We weren't spending money. The UAE Central Bank changed the loan to value. So first property, you can get in at 20%. So there was a lot of incentives for residents to buy property. actually our sister company, Mortgage Finder, 85% of the people who got mortgages in 2020 were residents of the UAE. So we saw a lot of residents buy their first property and get on the property ladder. There's a lot of supply. The prices were very good in 2020. And this is where we saw a surge in transactions actually throughout 2020 in general. I mean, the only times that we saw a decrease in transactions was during the pure lockdown. So we're talking about April, May, but we still had over 1,000 transactions a month. And if you look at the last few months, we're exceeding over 4,500 transactions. This is in the residential space. So it's very interesting, the trends that we're seeing.
And would that be, when you're saying that you had that volume of transaction from residents here, would that be something like people living, say, in an apartment in the marina and then moving out into a villa because the price points are kind of roughly equivalent, they can get more space, maybe their family circumstances has changed, something like that? Are we seeing a kind of I don't know what the phrase would be in Dubai, but a sort of a suburban kind of drift out from those prime locations, maybe more into kind of Arabian ranches, springs, meadows, that kind of thing?
Absolutely. So Dubai, just like the rest of the world, saw a huge migration to the suburbs, as we call it. And so basically, many people who were living in apartments, for example, the marina, maybe JVC, JLT, decided to move out to villa townhouses for more or less the same amount of rent that they were paying, or to buy property for more or less what they would be paying for these apartments in prime popular areas. And they were moving into these, 2-bedroom, 3-bedroom townhouses in the Dubai Land area for very affordable pricing during COVID. There's one, really important stat that I want to point out. Right when COVID hit us in March, the amount of searches, so the demand for villa townhouses on our website grew by over 400%. And this was in 1 month. And it continued to grow month on month, from shifting from apartments to villa townhouses. If you then look 3 months down the road, so typically it takes about 2 to 3 months for a transaction to come to fruition. Of course, during COVID, it took a little bit of longer time. But if you look at the transactions 3-4 months down the road, so July, August, September, we had the highest amount of transactions for villa townhouses ever in Dubai.
Wow.
Yeah.
Simon, how does that tally with what you experience in terms of Dubai compared to not just the rest of the GCC, but in terms of the rest of the world? How buoyant has the real estate market been here, and what is driving that buoyancy?
No, I think at the beginning, when there was a lot of social media and a lot of talk about best ever month, never seen real estate like it, I have to be honest, having spent 20 years here looking at real estate, I wasn't fully aligned. When you scratch the surface, it was right. There was a lot of substance behind this. And what I've seen and what we're continuing to see is that, and we've talked about some very interesting points here, income generating and double-digit returns. I think the most important thing I would say is investors are getting a lot smarter. Investors are getting a lot more sophisticated globally. And one of the biggest things Dubai has done over the last 5 years or so is it's increased the availability and transparency of data that exists. So when an investor wants to make an informed choice, they can look at the portals, they can speak to industry experts. But there's more than just an opportunity, to just have to speak to the brokers. And to me, I think that has changed what we're seeing here. It's bringing us aligned with what we're seeing globally. But one of the biggest shifts we're seeing globally, and again, that brings us to what's happening here, is the amount of capital that's looking at indirect real estate. And what I mean by that is, it's not buying an apartment, it's not buying a villa, it's buying into a real estate instrument. And the perception historically has been, as an investor, I can't afford to get into one of those. I'm not Deutsche Bank, I'm not Morgan Stanley, I'm not Credit Suisse. But actually, these are available to individual investors. There's all the mystique around real estate funds, real estate trusts. Dust that away. These things are available, they're transparent. All over the world, the people you're putting your investment money in, your pension funds, they're investing in these. So why now aren't people doing it direct? And we are seeing that shift, both here and internationally. But it's taken time, and it's taken time, I believe, because of legislation and transparency rather than actually concern about the asset class. So I think Dubai, like the rest of the world, is incredibly buoyant. I love Dubai. It's been home, as I say, for 20 years, and hopefully with the initiatives the government and His Highness are putting in place, we'll all be another 20 years talking about real estate. But I think as we move forwards, we'll start talking less and less about direct real estate and more about indirect real estate. So the comments, double-digit returns and income, are music to my ears, because that's what we target in the side of the business that we focus on.
Anna, I'll come to you on that point, because that was something that Simon said that was very, very interesting. For someone in your particular space that's kind of short-term lets, it's kind of, how much has the regulatory environment of Dubai, so things like the remote working visa, things like the freelance visa, making it easier for people to come and go out of Dubai with work, with freelance work, with their offices somewhere else in the world, have you seen that feed into your investment portfolio?
Yeah, for sure, and I think it's going to just continue to increase. We're seeing people come in for, when we started, our average stay was maybe 3 to 4 nights. Now, over COVID, it was maybe 20 nights. Now it's come down to maybe 10. So we're seeing a lot of this increase come from, as you said, people that are coming into Dubai, and they're looking at a property to stay, to vacation, but also to be able to work from home. So things like the internet connection that never used to be that important. Now we're upgrading apartments to make sure there's enough speed. And people need large spaces, large tables that they can work from, then have meetings or have Zoom meetings. So we're definitely going to see an increase even more in that direction. I think globally, when people, I personally don't think we're going to come back to this work travel as much as we had before, because we've all realized we actually can do a lot over Zoom. We don't need to have to travel to other countries. But this kind of idea of travel for pleasure is not going anywhere. People still want to go places. And instead of staying, a week in Dubai for vacation and going back home to London, people are going to stay maybe 2 weeks in Dubai. 1 week pure vacation and 1 week to be able to work from home and use the facilities, use the pool,
Talk to me a little bit about your business model then, because obviously it's a very, very sophisticated real estate play. It's much more simple than me buying a 1-bedroom or a studio apartment next to the expo site and renting it out for 67,000, whatever, a year. Talk to me a little bit about what goes into your investment model and how you make it work over a long time.
So clients come to us, they buy the real estate just like any real estate, and they give it to us to manage. So the property needs to be fully furnished. That's what differs it from a usual let. So we provide the service where we fully equip it. It's ready to move in, basically. All of the connections need to be done as well. And we manage all of the guests. So we manage the documents, so the passports, the check-ins, the checkouts, all the cleaning, the maintenance of the property. So everything that goes into a guest staying, guest support. If a guest wakes up to in the middle of the night to AC broken, we manage that as well. So it's sort of A to Z service for the. And
you don't own these units. You're managing these units on behalf of people that have put their property up to your service, right?
So we do. Frank Porter has units, but that's separate. The majority is, we do short-term for other people.
So that's kind of a sophisticated buy-to-let model instead of the annual contract, which I'm sure most of us entered into our own places of residence in Dubai. You basically take the management on someone else's unit and give them a different type of income. More lumpy, but maybe a bit higher.
Yeah, and the short-term market is anything from 1 night to 364 nights,
right.
So it's anything in between. And so you have the tourists, but you also have a lot of professionals, like we've seen in Dubai, that come in, they're looking to buy a property, they don't know where to live, so they take on a short let for 6 months to check the area, maybe they move to another area. So it's for anyone looking for that short-term accommodation.
Lynnette, talk to me a little bit about the buy-to-let market in Dubai for more kind of like, the retail investor, someone that maybe wants to buy 1 or 2, doesn't have the means to have a massive portfolio, but what are the kind of questions they need to be asking about what Dubai is like as an environment for the buy-to-let market? What kind of liquid assets do they need to have, and what are some of the contingencies that they need to have in place to make this work over a medium term?
Well, I guess that answer changed. So I can give you one answer, which is pre-COVID, and then I can give you another answer, which is post-COVID, which is the one that I'm going to give you. So investors who are looking to buy 1 or a few properties to put up for short-term, which I did during COVID, actually, you want to look at location. For me, that's the most important part. You want to look at an area where business travelers are going to come in and want to stay, as well as tourists. You want an area that has a lot of good transportation system, walking to restaurants, close to amenities such as beach, have the pools, gyms, things like that. You do see some short-term rentals in the villa communities, but it's very far and few between. Majority of them are like in the Dubai marinas, the downtown areas. You see them in more affordable areas like JLT and JVC, but I would say the ones where we are seeing double-digit returns are in these prime popular locations.
When you say double-digit, do you mean in terms of yield for the expense placed on it? So that's the rental yield as a double-digit, so 10, 11%, right?
Exactly. So even if you are a novice investor getting into buying investment property, you shouldn't just look at your net yields. You should actually do a proper IRR calculation for the properties. So basically, you're looking at OPEX, CAPEX, you're plotting it out probably for 20 years, which is pretty standard. And the kind of IRR that you want to see is about 10% for that single unit type of investments. Developers like a sweet spot of 18 to 19%, for example. This is for development projects. But for the single investor, novice investor who's getting into it, this is what I would highly recommend to do that exercise, because what looks really good on paper, when you do finally put it onto a spreadsheet, you can get an IRR of 2%. And then you can look in another area, for example, like Discovery Gardens, which is an area that you wouldn't really think of being a popular area, but when you look at the scheme of things of location, you look at affordability, you look at the new tram that's going into Expo, IRR is about 6% there.
The general drift of Dubai is going in that direction, isn't it?
Absolutely. So these are the kind of things that I would recommend. Know your numbers, interview many of the short-term rental companies, understand how their fees are deducted. Are they deducted pre-government fees or post-government fees? And see how, and look at the reviews. Look at the reviews of their properties, how they stage them. I mean, obviously, when you give a property to a short-term rental, you normally typically would furnish it yourself, but a lot of them offer interior design as well. And just also do your homework on Airbnb. There's also a website called AirDNA, which kind of gives like data and stats on the Airbnb market. And just get to know your areas.
Do you know whether there are different considerations in terms of financing for a residential mortgage versus a buy-to-let mortgage? Does that exist here? It's the same, is it exactly the same criteria?
So, yeah, it's the same. So for example, if you don't own a property, if you're renting and you want to buy a property for short term, you would come in at 20%, being your only property that you have in your portfolio. So the new regulation from UAE Central Bank is not for first-time home buyers, which is something that a lot of people got confused on when it first came into play. It's actually for a single property in your portfolio, which is on the credit bureau system. So you would just go in with 20% and you would get traditional financing. If you are currently owning a property, then you go in at a higher percentage depending on your nationality, if you're expat or UAE national.
Simon, are the days of flipping in Dubai over?
If I said yes, I'd be lying, because we see it on a daily basis. But what I would say is that the most important thing when I look at it, you try to take the emotion out of real estate. We've all looked at a house, as a tenant, where you walk through the door and you think this is home. You don't care about, the price. You don't look at the terms. This is home. I try to take the emotion out of it, and my first thought is, how do I exit this, and when do I exit this? So for me, buying direct real estate, you have this uncertain exit at some point in the future. Am I going to hold this 1 year, 2 years, 3 years? What's the market like in 1 year, 2 years, 3 years? We talk about supply, and we see numbers that, depending on who you ask, start with the 60s, 61, 62, 66,000 units per year, spread across Dubai as we move forwards. So to me, I think the days of flipping will continue. I think for me, I look at structured vehicles. What is safest for somebody's investment? And you mentioned double digits of 10 and 11. I'd like to look at in excess of that. I'd like to look at a vehicle where I know my exit when I go in. I know that I can invest, get a return over that period that is as safe as an investment can be. My exit is written. I know what my exit is going to be, or at least my exit structure is going to be, and I'm protected through regulation. So the only way to do that, really, to get those returns, in my view, is to be the developer. The developer is the person that is generating the returns. So the most important thing really is to have the right developer or be the developer. And people say to me, with $500,000, I can't be the developer. No, you can't be the developer, but you can invest in a vehicle that makes you the developer, where you get the developer returns. So when you're looking at the future of real estate, and again, forgive me, everybody talks about supply, demand, everything else, I would add a third context. I would look at your exit. And I would think, how do I get out of this in a few years' time? And to me, that's one of the most important criteria. So people flipping, yes, will happen. But the buyers of those units that flip, just think, how are you going to exit this? If you have to hold it for 2 years, nobody saw COVID coming. But if you have to hold it for 2 years, normal economic cycles aside, how are you going to get exit from this asset? If that's an unknown, then look at something more structured.
Talk to me about these vehicles that obviously you represent one of them, I mean, yours are for significant amount of money. What are the options available for more retail investors that maybe are looking at, I don't want to own the asset, I don't want to go through the hassle of furnishing it, I don't want to go through the hassle of appointing a short-term letting agent or having to deal with tenants, but I want to get in on the property ladder through the vehicle that you're talking about. What are some of the options on the market for somebody maybe who has, I don't know, 50,000 or less to get in onto that?
Yeah, there's
market.
A lot of noise around real estate funds. And you know, people always say, oh, it's a REIT. People don't actually understand what a REIT vehicle is. And actually, a REIT vehicle in the Middle East is very different to a REIT vehicle internationally. I mean, REIT vehicles are tax-efficient investment vehicles, which in the UK and the US are amazing. You can offset significant amounts of your tax. But we're not in a tax environment. So a REIT here has a slightly different connotation. So the way, you know, our fund I mentioned is, you know, it's $500,000 as an entry point, which is one of the lowest you can have as a regulated fund, a qualified fund within DIFC. But for investors with smaller tickets, the $50,000, the $100,000, there are, you know, a lot of financial institutions, banks, etc., that create vehicles that invest in funds like ours. So you actually still get, you know, potentially the 12% return over the 6 years, but you do it as a collective of investors coming in as a shareholder. That's something we can't, you know, we're not allowed to sell investment advice around that. We can't do that, but certainly the wealth managers of banks and financial advisors can create these vehicles for you to enter into funds like this. So to me, you know, I would read the REIT prospectuses very, very carefully, because again, you know, there's a lot of fees that move around between asset managers, REIT managers, consultants, and others. Read them very carefully. Stress test the investment returns that they promise. And again, ask the question that I mentioned earlier: what is my exit? If my exit is shares on the stock exchange, then you're running the same volatility. One thing the UAE and the GCC has a real shortage of is income product. You know, we hear about the, you know, investors that have got 50, 100, 150 million dirhams, dollars to spend. They can't spend it. You know, for the last 10 years, I've spoken at the various conferences about institutional investment, and I've said, quite blasé, but I genuinely mean it, if somebody gave me $1 billion to spend on institutional real estate investment, I couldn't spend it. You know, single buildings leased to a single tenant, single buildings well leased, office buildings to XYZ PLC on a 10-year lease, you know, they don't really exist. And when they do, there's such a weight of capital that's chasing them that the yield, your return on your investment, is driven to the floor. So again, you know, you have to look at what the vehicles are that others are offering around that. And to me, having that exit is crucial.
Anna, who are your clients in terms of the people whose properties you are managing on a short-term basis? Why are they coming to you and not going to just the traditional, I'm going to rent it out on a year lease or something like that? Why are they coming to you? What's in it for them that's different?
Well, generally, you will make 20 to 40% higher on short-term than long-term, generally. I think in the current market, if we talk about what's happening...
Is that net or gross, can I ask?
That would be net.
Okay.
And if we're talking about COVID and sort of the uncertainty and why short-term is doing so well now, it's because of this flexibility. So clients are so afraid to put things out on long-term. They like this flexibility of knowing that they can start short-term if they sell the unit, which happens all the time. So they put it on the market and they rent it. They make money while it's on the market. They get the right price and they take it off the market. You can't do that with any other, with anything else. So there's this flexibility.
So that's interesting. They put it on the market to sell because they want to leave for whatever reason. But during that window of transaction, whatever it is, 2-3 months, they can actually make an income from it by putting it, a fully furnished apartment, on the market.
So we've had properties that have been with us for 3 years that are still on the market because they've been doing so well. We've had properties that we've taken taken on and that come off 3 months later. So this flexibility of short term is why clients love it. And we don't have these contracts that you have to sign on for a year or else. The whole idea of short term is that it's supposed to be this flexible option for you to make money on your asset while maybe thinking about other options like selling, or even long term. We've had a client, for example, that got a check that was double what he wanted for a villa, and he said, "Look, I'm really sorry, but I need to take it. It's a once in a lifetime opportunity, and it's not a problem." So we have clients that are making more money in general, and there's the flexibility factor that they love, especially now in the current market. And our clients come from, it's local people that live in Dubai and have a secondary asset. It's international clients, and we see a lot of this. Now people are looking at Dubai. It's quite interesting. They're thinking, okay, I think it's especially happened once the borders opened only really here, and people started to come on vacation. So we've had a lot of people that have stayed in Dubai for a few weeks, and they said, well, this looks really interesting. Maybe I want to buy something. So we've had that happen. So Dubai has become quite an interesting player internationally for people to come invest into real estate.
I mean, would you say that Dubai compares favorably with other major cities around the world for your kind of investment, for that short-term let?
Oh, of course. I think Dubai, the yields in Dubai are higher than other markets, other more mature markets for sure. And we're going to continue to see it.
Is that because the capex is relatively low as an entry point?
It's still a kind of a young city, Even our business is very new. Our business is only 4 or 5 years old. London, in comparison, they've been doing short-term for 10, 15 years. And you can see it with the Airbnb listings. Dubai has only about 8,000 listings versus London that has like 100,000 listings. So
it's only been legal here. How long has it been legal here? About 3 years, is it? Something like that?
2016, yeah,
right,
is when it got legalized. So it's such a new market here still, and we see it with the areas. So for example, when we came, you could only really make money in Marina, downtown, and Palm. Okay, now we're seeing, like you said, other areas, Discovery Gardens, close to the Expo site, JLT, JVC, Dubai South. There's so many new production cities, sports city. There's so many other areas that are doing really, really well. I mean, our occupancy in those areas is over 80%. That people didn't have a clue about even 4 years ago. So Dubai is really becoming this international city and growing out into different areas, which is quite interesting from an investment point of view.
Lynnette, talk to me about the strategy that it was a rule of thumb a few years ago. I don't know whether it still is, but you rent where you live and then you buy to rent out somewhere else. Is that still a strategy that people are doing in Dubai? And what would be the considerations to lead to that decision?
As I said, you have the pre-COVID and post-COVID answer, so I'm going to give the post-COVID. As I said earlier, what we've seen is a lot of residents buy property here. So people who are renting decided to buy. We're also seeing people who own property here buy for investment, whether they're buying for long-term rental or for short-term holiday home rental. We're seeing people who own property here or even who are renting here contribute to these crowdfunding platforms. I believe there's 2 here who are regulated by DIFC, and it's basically where a group of people get together and they buy one property or a percentage of that property, and you can get in anywhere as low as like 5,000 dirhams, and you can own a 1-bedroom in Dubai Marina, for example, and you get in with between 10 to 15 people, and it is fully regulated by the government. It's done in a very clean way, and this we started to see become popular, I would say, by the end of 2019. We're also seeing, so during COVID, we saw the off-plan market kind of decrease. There wasn't, actually there was hardly any activity. There was no new projects that were being launched. Developers were just trying to complete the projects that were already on their books. But as we've been coming out through COVID, we're starting to see an uptick in the off-plan market as well. So we are seeing people invest in that market. We are also seeing high net worth individuals come into the market, especially foreign investment, and from places that we didn't see so much popular activity from. For example, from the UK, from Germany, from Switzerland, from Puerto Rico. I mean, there was a crypto conference here last week, and quite a few of them bought some pretty hefty properties. We saw the transactions come through last week from the land department. So we're seeing, like I said, we're seeing a lot of different trends that we haven't seen before. So to answer that traditional rule of thumb question doesn't really exist during the times that we're in.
It was interesting, because on the first AB Money Forum back in March, we had Henry Fawn from Knight Frank practice, and he was saying that he'd never seen activity on the Palm quite like it.
Yeah.
From exactly the point you mentioned, that high net worth individuals from markets like the UK, like Germany, like Spain, like Portugal, were buying properties on the Palm for 20, 30% what their listing price was. So how important has Dubai's ability to open up post-COVID and almost put itself in the shop window as a place to break the lockdown that you're seeing in the rest of the world? How big a deal has that been for the property market here?
Massive. It's what kept us alive. So during COVID, the government was extremely proactive with the regulations. They came out with the retirement visa, the home investor property visa. You can live here and work from here remotely. The borders were open. We were very strict with the COVID regulations. We're number 2 in the world when it comes to percentages of residences that are being vaccinated. All of this has brought Dubai to where we are today, and the success we have a success story that we can actually talk about. And also there was a lot of digitization efforts within the property market that happened during COVID, which is a separate topic, but it does help with transaction levels. So it's extremely important. It's what kept us alive. You do or you die, and that was one of my mottos during COVID. And you move fast and make things. And that's exactly what we did.
It was interesting, the crowdfunding element that we heard Lynnette talking about there, Simon, where people kind of club together and buy a fraction of a house. That's kind of a REIT in a weird kind of way, but what would you say to people thinking about that kind of model as a way to enter into the property market? Are there robust legal structures that you think there are in Dubai that would actually make that a viable proposition?
I think you mentioned 2 comments around that. The first is that it's commonplace elsewhere in the world, which it certainly has been. The second one is that there are regulated entities within Dubai that allow that now. Forgive me for going back to something I said earlier, but again, I look at my exit. If I go in with, I'm 1/250th of an apartment, and I don't want to be 1/250th of an apartment anymore, how do I liquidate my asset? I have to find somebody else that's going to take my space. How do they take my space? Do they take my space at the price I bought in, at today's price, at my exit price? There are a lot of moving parts. I have to be honest, it's not a funding source that I've looked at personally. It's not something that I think yet the market is ready to accept other than in direct real estate, but certainly the Crown Prince announcement in DIFC about new platforms for that will, I'm sure, see it get some momentum. I'm sure we'll all learn more, myself included, but at the moment it's something that I'm a little cautious of. But I just want to go back on one comment you mentioned about international investors, and again, I think you're right, the geographies that you mentioned. When I speak to my colleagues at Ellington Properties in particular and look at the people that have come through, one of the common traits that I'm hearing is the concern about taxation changes in those other markets. You know, you look at the UK government, the German government, and all the geographies you mentioned, they've spent billions, tens of billions, hundreds of billions, whatever we say in money, in supporting those countries and those economies through COVID. These aren't free gifts, sadly. At some point, the government has to start recovering some of those monies. And the only real way they can do that is through taxation and taxation changes. So the high net worth individuals who probably have great tax structures at the moment are probably exposed. As the biggest earners in those geographies, both corporate and individuals, they're likely to be the people that get hit with the tax changes first. So part of the reason I think, as well as the Dubai opening up from legislation and everything else, is we are a market that is open for business from a taxation point of view. So I do think that's also added value, and great for us and great for our markets, because long may it continue bringing investors to all of us.
So just talk to me about the crowdfunding thing. Sorry to labor this point, but what are the vehicles for actually doing it? Like, could you talk me through, is it a vehicle, is it a structure, or is it literally just kind of a bunch of like-minded people going, I want to buy this villa? I mean, how does it actually work? How do I get into it?
It is a proper structure. As I said, there's 2 that I know of that are regulated here by DIFC. So basically, they find a property that has very good returns. When I say very good, I mean 8% plus net yield. Typically in prime popular areas, because the point is for them to lease it out after the property is purchased, or maybe it's currently being leased. They create an SPV for this property, and that's how it gets transferred on the title deed. So let's say there's 10 people that are partnership in the property. They're part of the SPV. When they want to exit, so to answer your question, Simon, when they want to exit, they can sell their share back to the company who's running the crowdfunding platform, or they can sell it to the other 9 people who is part of the SPV. And typically, their hold is about a 5-year hold.
Anna, have you found that when people are looking to take up your services, are they buying another place, for instance? So, for instance, I'm owning my flat in the marina and I want to move out to Springs, Arabian Ranches, wherever. Am I likely now to keep my flat in the marina and use you to try and make a bit of more passive income out of it, or am I selling it? What kind of the trends that you're seeing that maybe in a post-COVID world are a bit different, if the entry points into the villa are a little bit better value than they were 2 years ago?
For sure, if you don't need the cash right away and you can hold onto your asset, we are seeing people put it on the market for sure. Because they also don't know if they want to stay in the new area or what they want to do with their asset. We're still in this time where maybe the prices will continue to rise. We're not out of COVID, right? We're still slowly coming out of it. We have Expo around the corner. We have new regulations around the corner that are going to open up the market. So people are, from what we see, right? I don't see the big picture of what everyone is doing, but from what I see with our clients, and we have people that are moving out, that are putting their current property on short term, or that are in their current property and they're buying a new one to put on short term, or multiple properties because they're seeing all these opportunities. I think it really depends on the individual and what they want to do. We have people that have unfortunately left the country as well over COVID, that have not sold their property, that have kept it and are renting it out on short term. Because again, they don't know what's going to happen and they're holding on to their asset. Equally, we had people that panicked, that regretted it, actually, because when the news hit that they were shutting the borders, we had a few people just stop, pull it out, and they sold, and now they've come back and said, oh, I regret selling because the market's picked up for everything, right? And they sold it, unfortunately, a bad time. So you have it from all sides. I don't see the market as recovered yet. I'm really seeing in everything that people are booking October, November, December now. They haven't been doing that before. Usually people were worried. Now we're seeing the market pick up, the occupancy pick up, the borders open, vaccinations around the world. So we're not even out of the bad sort of COVID time. There's still a lot of room to grow. And if you can hold on to your asset, I think you should, hold it and do short term.
Trust me, hold on to your property if you can. Don't flip. Going back to that, so talking about it from a kind of an investment point of view, do you have clients, Anna, that have started with 1 and have got 2 and have got 5 and have got 10 and are now actually seeing this as kind of what began as I might try this out, has actually turned into essentially their business?
Yeah, for sure. We're seeing a lot of that happen. And, the availability of mortgages, the ease at which people can get mortgages, the opportunities that have come up, the new ones. So now Expo is a huge opportunity, right? So we have current clients that are calling us and asking, where should I buy? What's the best building? What do you think? Should I buy now? Should I buy later? Buy now, not later. And, we're seeing a lot of people come to us with these new projects that are happening now, that are off plan, and what do we think? Where do we think the market's going? So we are seeing a lot of people do that for sure. And they're doing it in different areas, right? Which is great. They're diversifying their portfolio in Dubai and seeing what works.
Talk to me a little bit, Lynnette, if you can, about the regulatory environment in terms of banking and finance. Are there caps on the number of mortgages that you can have in this city? Are there such things as interest-only mortgages or other vehicles like that you see in other buy-to-let mortgages? What are the options that are on the table for people that want to get into property as an investment, purely as an investment?
So for the banks, they've always been very competitive for the last few years, since I would say about 2017. During COVID, they became very competitive, even more, and creative. So there isn't a cap when it comes to the amount of mortgages that you can have. You just need to stay within that 50% ratio. Interest only, we do see a few products. We do have products like that. We are seeing people pull equity from their primary properties or even some of their secondary properties to invest in other properties. That was very popular over the last year because it's just equity that's sitting there. It's not making any money, and you can make money from this money. We're seeing the best interest rates that we've ever seen here in Dubai, little as 2%. We're seeing the banks offer to pay the fees. So this is how a lot of residents were able to get on the property ladder. So they're coming in with 20% for their first property or the only property on their portfolio. And the banks were covering the fees. They were covering the 4% DLD fees. They were covering the 2% agency fees. And this really helped for residents to buy a property. In 2019, we saw quite a few rent-to-own schemes from developers. And then also in 2019, the Dubai Land Department came out with a new title deed for rent-to-own that stipulated basically the entire contract on the title deed. With this, it did become popular, I would say, H2 of 2019, because this was competing with the developers' post-handover payment plans. However, during COVID, it kind of just became very quiet in that space. I do believe that we do have the opportunity, there is a lot of opportunity in the rent-to-own space. I do believe there's a lot of candidates out there. You just need to be a little bit careful on the pricing and the valuation of these properties. But as far as mortgages, this is basically, oh, and also the banks became a little bit more lenient on lending to non-residents.
I imagine that a buy-to-rent mortgage would not be, you wouldn't allow to sublet, would you?
Yes, you can, because the developer is your mortgager.
Okay.
Yeah.
Talk to me about the advantages of an interest-only mortgage. Why would a property investor choose an interest-only mortgage over a capital repayment mortgage? What are the benefits? Obviously, there's tax implications in like the UK that doesn't necessarily exist here. Why would someone choose that vehicle here?
So for me, an interest-only loan is a very short-term, you're looking at a very short-term outlook, right? So you're not looking at a 10 to 15-year mortgage, you're looking 5, I would say. Yes, your payments are very low, but at the end of the day, you're still going to have to pay your principal for your mortgage. So the only benefit that I see is just lower monthly payments.
Simon, talk to me about why, if anyone's out there thinking of buying either their first property or a second property, why should they buy it here, either in Dubai or the whole of the UAE, and not somewhere else, like maybe where they're from, or somewhere like the UK, or a prime residential real estate market like New York or Singapore? What are the advantages about buying here right now?
I mean, I think one of the interesting statistics I read in one of the sort of international real estate sort of market reports is that, let's take it was 66,000, I can't remember the exact number, units coming into the market during the course of this year. I think they were saying in excess of 70% of those will end up in the rental pool from people that have bought them, whether long-term and short-term rental. So that shows there's obviously a strong underlying rental dynamic to any real estate product. To me, I think, we look at the occupancy of a lot of these buildings, and I can only talk with confidence about the Ellington Properties buildings because I haven't looked at the others. The occupancy there is in excess of 80%, without question. The rents have held their rent despite COVID, which shows the quality investments, quality construction will hold its value. Dubai has some quality construction. We're new, as a country, we're new. Most of our real estate is new post the granting of these laws. So that you're getting a lot more modern real estate, strong tenant demand, and I strongly agree with the short-term letting model. I think if we're enticing investors to come in, there is a short-term market. We're a hub for international business sitting between East and West. People don't want to commit the whole year. I think it's only a matter of time, and I would love to sort of tagline that this is under Ellington Capital, but others might beat me, but it won't be long before we institutionalize the short-term market in the region. I do think not only the build-to-rent model that we're looking at, but a build-to-short-term rent market I think there's an investment vehicle around that that I would hope we would all participate in as we go forwards.
Anna, talk to me a little bit about the hidden costs of your model for an investor. What are the kind of the costs that they need to factor in over and above, say, a traditional buy-to-let model?
They have to think about bills, so it's something that you must pay that you don't do with long term. So that DIWA internet has to be set up and working all the time for the guest. And the furnishing costs. So the initial investment of furnishing your unit is the cost in short term. Something like that. So because we have so many more properties now, and because we see the demand, it's something that we're also, taking some cost on for some clients as well, or being able to buy back from the client because we have such a turnover of new properties. It's something that we're considering doing as well. So financing some of that for the client to make it easier to convert to short term.
And I imagine there's a fair bit more maintenance that has to go into a short-term let property.
I mean, to be fair, there's more maintenance in Dubai in general than in other markets. I mean, I have properties around the world, and I don't have maintenance costs in London like I do in Dubai, just for my personal,
Why is that? We don't look after properties here?
I don't know.
They're not very well built? AC, I guess, would probably be half of it.
No, everything is great. Everything is well built. It's just, I don't know, maybe because of the temperature changes and there's a lot of things you have to factor in. But I don't think it's as high as people think. There is for sure things that you have to replace because you have so many guests coming in and out. But yeah, it's definitely something you have to look at.
Listen, I live in the Springs. The AC guy may as well rent out my third bedroom.
Exactly.
I mean, he's there literally every 5 minutes fixing something. Guys, time has beaten us. I'm really sorry. Again, we could have gone on for hours, but Simon, Anna, and Lynnette, thank you so much indeed for your insight on the property market. I hope that's given people a lot of food for thought about the different types of real estate that you can invest in.